Hello, YouTubians. It's Russ Sandlin. So, I had a lot of people ask me, what exactly is the FDIC? Because a lot of the people who watch my videos aren't necessarily from the United States. So, again, we've been talking a lot about the financial instability, and last week was a rocky one. Looks like this week things are stabilizing a bit, but let's talk about the FDIC. That stands for Federal Deposit Insurance Corporation. Some of you may have watched It's a Wonderful Life. It's a 1947, I believe, movie that is a movie about the Great Depression that happened between 1929 and 1939 in the United States. And there were a lot of bank runs. Most banks went out of business. There wasn't any money. People didn't have jobs. A little bit more on the history of the FDIC, that it was born from that age of the Great Depression. So the FDIC stands for the Federal Deposit Insurance Corporation. And it takes over banks from time to time. It hasn't done a whole lot. I think that before the takeovers of Silicon Valley and Signature Bank last week and Silver, what was it? I forget, Silver Ridge. I forget the first one, the first bank. It was the smaller of the three. They really hadn't taken over any institutions, and since I think probably since 2020, which is remarkable because that was the COVID times. So it's really there to be a backdrop. And what does it do? It insures funds for depositors. The last really big one was in 2008, where there were, 25 banks that failed during 2008, the Great Recession. And the biggest one, and it still stands as the biggest one, was WAMU, or Washington Mutual Bank. That one collapsed. There were a lot more that year. 2008 was a pretty big catastrophic event. Now, we're nowhere near 25 banks failing right now. We're talking 3. Maybe that's the end of it. I don't know, but maybe we'll hit 25. It really depends on who you listen to. As of right now, though, it seems like the failures have stopped temporarily. And a failure is really a failure in trust because the banks don't have your money. Once you put the money in, they quickly lend it out to try to make interest-bearing loans with that money. They are allowed to lend out 100% now since COVID of the money that they have in deposits, which means on any given Sunday or Monday, you go into your bank, they don't have your money. So with that backdrop, the FDIC is there to support small investors, $250,000 or less. And again, there's been 10 banks, including the 3 last week, that have failed in the last 10 years. So it's 13 now, since the Great Recession of 2008. So the FDIC was established in 1933. That's 4 years into the Great Depression. In 1933, over 4,000 banks failed. 4,000. So basically the entire banking system collapsed. So between 1929 and 1933, really depositors lost all their money. And they lost about $1.3 billion back then, which is trillions of dollars today. So if you have less than $250,000 in your bank, you're covered. If you have more than $250,000, you're not covered. If you have $251,000, you're going to be made whole with $250,000 of it. So I keep telling people, you need to, if you have that much money, spread it out. My plan, and I don't have a lot of money, but if I did, I'm all set with my plan. I've got 5 bank accounts here in Qatar, different jurisdiction in the United States, and I have 5 bank accounts in America. And I try to evenly distribute my money amongst them, just in case. So if everything goes bad in America, I've got some money here. Now, I'm not in Qatar for much longer. As many of you know, I turned 60 on May 28th. So I'm not allowed to work here after that, technically. I'm hoping to get here, be able to stay until the end of the year. They told me I will be, thank goodness. But then after that, I have no idea where I'm going because there's a lot of laws in a lot of countries saying that if you're over 60, you can't get a job. So what that means is I'm looking for another locale to open up bank accounts because you can't open bank accounts in Qatar unless you are working here. So where does the money come from for the savings of your bank if it fails? Well, it comes from us. It comes from US tax holders, so taxpayers. So what happens is when we pay our taxes, a small portion of it goes to the FDIC as a reserve to be sitting there as an insurance policy for those banks. So I'm not sure how much is sitting there right now or if there's enough to cover if we had a big bank run again. But we do have some money in reserve. I'm looking desperately to find out how much is there. I got my Google up while we're talking. I don't see it. But the salient point is the FDIC is there to keep the banking industry stable in the United States. And it's there for small investors, the mom and pop folks, people like me, actually people with more money than me, but not over, not the million and billionaires. So if you have over $250,000, my recommendation to you is to spread it out amongst banks. And if you have a lot of money, I would say you want to keep some money in cash, in real estate, and gold and silver. I do collect gold and silver. So different locations, different locales, different banks, different jurisdictions, and spread your assets around. Look for ways to diversify and have that cash on hand because who knows, maybe if things really go upside down with the economy right now, you'll be able to find some really good investment fire sales. So anyway, the FDIC, the point of this conversation was it's there to help the folks who have $250,000 in bank accounts in the United States. If that bank fails, then they will give you that money. They'll make you whole. It's kind of a bailout if you think about it. And it's there to keep confidence in the banking system. And I think that with the United States coming in and helping to bail out Silicon Valley, and Signature to a lesser extent, they help to reestablish the confidence. Without that confidence, there is no banking system. The banking system is only there if you trust that the bank isn't going to go under. And the second they smell blood in the water, the people will be lined up to get their money out because you don't want to be the last one going there when they close down and don't have more cash to give out. I was a victim of a bank run in 2008. I wasn't the victim. I was managing a big chunk of a bank in Kuwait at the time, and we had people lined up 4 or 5 blocks out around the corner to get money out. As part of that whole 2008 slowdown, and there was an oil crash. The price of a barrel of oil had dropped in 2008 from, I think, $140 a barrel all the way down to $29 a barrel because there was no demand because all business came to a screeching halt. And when there's no business, there's no need for oil and gas. And so the prices dropped. And when that happened, the economies around the world dropped. So the state of Qatar, or I'm sorry, the state of Qatar, the government of Kuwait, they came in and they propped up the bank that I was working for. They gave money to keep it liquid so that everyone, as they're lining up to get their money out, they're able to get their money out. And there was matching money to go back in. And within a few months, they were able to regain their deposits. They did some really cool things like this. It's called Aldana accounts. Aldana is Arabic for pearl. Basically, if you put in so much money, and you've seen my other videos talk about that here in Qatar, then they have drawings so you can win millions and millions of, they actually have a millionaire, US millionaire drawing at the bank I'm talking about, the Aldana in Kuwait. So the amounts of money they give out there are a little bit higher than what they do in Qatar. Although Qatar gives a lot of money his way as well. So it was a lottery to attract funds from people because a lot of the expats in Kuwait had money, and there's 800,000-900,000 Kuwaitis who also have quite a bit of money as well. So Bank runs because of a lack of confidence. FDIC is there to backstop, to provide confidence. It doesn't cover the whole bank. If you've got millions in there, you better make sure you've done your due diligence and know that that bank is safe. And if you have a lot, again, I suggest you have many banks spread apart in different jurisdictions and amongst different banks in the United States if you're American, so that you can take advantage of the FDIC to backstop you and have diversified assets such as real estate and gold and silver, so that you don't lose everything if there's another series of bank runs like we had from 1929 to 1933 and in 2008, and what we saw in Cyprus, what we've seen all over the world. There's been bank runs here and there. So anyway, that's all my story for today. I'll be talking about who won some money again. That'll be my next video. I might do that later today or tomorrow. I think what I have next is Qatar Islamic Bank. And yes, I do have a bank account there, and I'm hoping that I win on that one. But if not, at least it feels good to be saving money. So until then, make it a great day.